Dion, I don't know if you have heard, but Morgan Stanley is out with a major warning for the real estate market. They're actually saying or trying to indicate that this could dwarf what was the Great Recession or the housing crash of 2006. So, with that context, do you have an idea on what Morgan Stanley might be talking about?
I do, and I'm here in Gary, Indiana, where the Airbnb was fairly affordable because I'm right next to the train that's shaking the building right now. Um, so every time somebody compares this to 2008, 2007, or whatever, and they say it's going to be worse, it's going to be the same, it's this thing that's missing to cause a housing crash, to cause a real estate crash, is adjustable rate mortgages with people who didn't have to verify their income. And so we don't have those now in residential. So they're talking about commercial. They're talking people who have adjustable rate mortgages. They could be talking about almost anywhere in the world outside of the U.S. because they all have
Right.
adjustable rate mortgages.
Yeah.
And so there's protests. Right, I'm on my way tomorrow. I'm getting on a plane to go to Portugal, where there are currently protests happening over
Mm.
the housing crisis in Portugal. So that's going to be fun. That was a new element wrinkle that popped into the plan in the last couple of days. So the commercial element here in the US, I think we have a couple of things. So you have adjustable rates, you have working remotely being more popular than at any point in our lives, or possible even at any point. And there's going to be some pain.
Yeah. Yeah, so you're absolutely right. The good news is if you are a follower or watcher of One Rental at a Time or Dion from Dion Talk, you know that we've been warning you for 6 or 9 months that this was coming. This was a pretty easy domino to see fall. In fact, you can go back and watch me talk with Jonathan Twomley or Anna Kelly, both in this space, and I'm like, this is not good. Short-term debt, which in commercial is called bridge debt, interest rate only to make the numbers work, brand new syndicators coming in out of the woodwork, unrealistic assumptions. We had cap rates under 4, occupancy at the highest rates, 20% rent growth. It was all kinds of bad, and it is going to be a spectacular blow up, let alone understanding that commercial is office, is retail, is industrial, is mobile home parks, is. Yeah, the commercial real estate pain that's coming will dwarf the pain that was felt in the residential crisis before, but it is for the same reasons. So now that Morgan Stanley has caught up with what you and I have been talking about for, call it, a year, I want to even go deeper. And I want to talk to the folks watching YouTube right now. And I want to share with them how they might participate in this. Because again, it is one thing to say, hey, look at those office buildings in San Francisco that were worth 25 million, that will be worth 8 million. And yes, Jonathan Twomley and I did a deal evaluation, and there can be 80% crashes coming. But very few of us watching YouTube are going to buy an $8 million office building on Market Street. But I do believe this commercial pain coming will provide opportunities. And I thought you and I should talk about where investors who are fans of ours should look. You have any ideas?
I do. So every now and then I make the mistake of thinking things that we talk about consistently are just known. Like we talk about things so much, it's just kind of data that everyone has. And I was talking to a realtor, and I'll admit he's kind of younger. He's only been doing it for 3 or 4 years. And I mentioned house hacking, and he goes, "Oh, that's that thing where you rent out rooms, right?" And I thought, okay, so you're ignoring small multifamily house with ADU, the low down payment, the better interest rate. Like, yes. So the mistake is mine for thinking people just know things.
Yeah.
And
Yes,
so when it,
and yeah, yes, and yeah, that's what
yes,
they're thinking.
and exactly right. So I think that there's a bunch of commercial investors out there who don't know what we do. And they might have properties that have between 5 and 8 units. And they went to traditional lenders, credit unions, mortgage brokers, and they found out that you need a DSCR loan and asset-based lending, a commercial loan that's going to have a loan reevaluation period. It could have an adjustment, adjustable rate. It could be fixed, but have a loan reevaluation period. And they don't know, because I just think it's known because we talk about it, that companies like Convoy Home Loans exists with fixed rate debt, 30 or 40-year fixed rate debt on up to 8 units. So I'm adjusting part of my search parameter to a small multifamily, adjusting it from 4 to 8, and
Right.
looking for the people who are in pain because their rate is adjusting. They're not hitting their NOI and the type of loan structure that they have. And they don't know that Convoy Home Loans exist, to then go in and say, and I'm watching as the pain starts to hit as interest rates go up,
Yep.
that might be the time to come in, solve their problem. Take they're not going to be able to afford the rate adjustment. They might not have the six-figure check to write to bring the balance down to where their current lender is happy, and put it on fixed rate debt. So as an investor, adjusting our search to adjust our criteria based on the current market is important at all times, and that's what I'm doing now.
Yeah, so there's a big thing about commercial for folks that watch one rental at a time. Most people think commercial is big. And for whatever reason, there's a delineation. When I talk commercial, it's 5 units and above. And when I talk residential, it's 4 and below. Why? It's all about the debt. For whatever reason, a fourplex is considered a residential loan. It's, Fannie Freddie eligible, 5% house hack, all of that. 5 and above, traditionally speaking, is commercial. So the first thing I want people to realize, and what I'm trying to repeat over and over, is I'm going to be searching for multifamily 40 units and below. I believe in my market 40 units and above. Even if there was pain, the big boys will look at that. During the last multifamily crash, we bought things up to 20 units. We bought 4 of those. I want to try to go a little bit bigger this time. But yes, they are there. Here's another thing that most people don't know about commercial. This is important. A lot of commercial loans have in the loan agreement an assumption clause. Most of them have it for a 1% assumption fee. You still have to qualify, but they will. Commercial loans are assumable in most cases, or I should probably say in many cases. For example, Anna Kelly, our Wednesday millionaire who comes back for 3 years now, she is trying to assume a large building and a Fannie Freddie at 3.25. They're there. So again, yes, interest rates 6, 7, a DSCR loan might be 8. Fannie Freddie loans in the commercial market, even commercial banks, there's an assumption fee. We did an assumption of I think it was an 18-unit building probably a decade ago for something materially below going rates. So again, you got to do the work. There are going to be opportunities for those that are informed.
Right. And I think that the trick is planning now for the next recession. Exactly. So it isn't to buy the property with your better adjustable rate mortgage than the current owner. It's finding a way to acquire that asset with the right type of debt, so you don't end up in the same situation 3 to 7 years from now.
Yeah. And then the last thing I want to talk about, again, for folks that want to take advantage of this, I would bring up my playbook from my first book, One Rental at a Time. If you've been following what Dion and I have been talking about the last couple of years, we've both been focused on residential, right? Small multis, single family homes. That's just where the numbers work. The debt structure was right. It just made the most sense. But if we are going into an environment where the first-time homebuyer home is the scarce resource and we see prices go up for first-time homebuyer homes, and we see multifamily come down because of debt, stress, all of that, for those of you who do the work, you could 1031 out of a house into an apartment building. I went from 8 to 80 last time. I plan to do it again. Dion, is that something you've ever looked at or thought about doing?
Well, I look at it often because you and Matt, you have much larger portfolios, and that financial freedom is something I want to emulate. Myself, I know this breaks everybody's brain as an investor when I go, I'm happy with the number that I have. I'm not actively pursuing growth, but I'm not stupid, which means I have my search set up for those things. And if the right deal pops up, I will absolutely pounce on it.
Yeah. Again, for folks watching this, I want you to understand that Morgan Stanley's call that a major warning for real estate prices crashing is accurate. It is without question commercial, but there are things that you could do. It all starts again with your buy box, your daily discipline, grow your network, find multiple lenders, whether it's Convoy or Velocity or your local community bank and credit union. You got to have access to capital to get these deals done. Realize that commercial does have an assumption clause, which a lot of people don't. And again, if you've done the work and you got your single family home in 2018 or 19, you got a bunch of equity, don't be afraid to at least consider and evaluate a 1031 exchange. It changed my life. Trust me. If we only had 8 homes, I'd still be working. 80 units, might have been enough. Dion, how can people get a hold of you or follow you?
You can find me here on YouTube at Dion Talk Financial Freedom, or you can find information at diontalk.com.
Yeah, go check it out. And again, folks, if you haven't already downloaded the free binder strategy, you are missing out. Dion, where can they find that specifically?
So at diontalk.com, there are 3 options. One of those is the binder course, which right now has no charge. So you get the course, my spreadsheet for how I track my expenses and run my business, and my seller financing letter, all included in that for free.
You're such a nice guy. I tell you. Wow. Thanks, bud.
Ciao.